Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we're at the 31st of July, 2018, about 4:15 p.m. Central Daylight Time. Huge up day in the soybean market. Big time, big time. Wheat continues to run as world weather conditions are even taking down one of the smallest net exporters of wheat, Sweden, their crops being impacted now. In the corn market, up another 5. The news of the day was that maybe U.S. and Chinese trade talks can resume down the road. It appears that behind the scenes, representatives of the U.S. and China are talking about a framework to set the talks back in motion. Not a framework to end the trade wars, but to do that. What we don't know is what the president's going to do about the $16 billion in tariffs that he can put on as soon as tomorrow if he decides. So we're going to find how that all plays out. If we take a look at a weekly area chart of just closes of beans, we're up 33 cents for the first 2 days of the week. That's important. I had mentioned just yesterday when the market got up, the previous high was, I want to go right there, 877 and a quarter. Got it? And with an 874 close. Then the market fell back, started coming up, got up yesterday to 870 and a half, and today you bust through that. So I can actually say the market now is in an upthrust with a logical target if it wants to run to what I call that line in the sand of the 18-day average of closes. It's far away. It's 50 cents. That'll drop if prices keep rallying. Now, if you take a look at this chart, you can see that we've got possibly this pattern. Is it going to be a saucer where you slip back down, or is the market going to move out of here? There's different chart patterns that I always look at. That's one of them. The market's got a current pattern, and it's had it of higher lows and higher highs. It's been out of its downtrend for a while. The market has stayed over the 18-day average of closes since literally right here. And this was 873 and a quarter on July 24th, a week ago today. And from that time, if you look, the market has not even gone back to the 18-day average of closes. What about resistance points? Well, one of the resistance points you paid attention to yesterday and back here 2 days ago from there. You hit the upper Bollinger then, and today's news moved the market out. Is it sustainable is going to be the big question. Let's take a look at momentum. Momentum says no, it's not sustainable unless there's real something behind it. You're overbought, you're over the upper Bollinger Band. The market is likely to pull back into the band, and if it does so, if it doesn't thrust forward again, what happens is this Bollinger Band won't keep pointing up. You'll go back into the sideways action. So I think pros today, I know you're not going to like hearing this if you're in it, I think they were taking some money off the table. In the meal market, because you're overbought and the first move back over the upper Bollinger Band on a close, I think you got some pro money coming off the table. That doesn't mean they're coming out of all their positions. The trends are up. You're over the 18-day average. It's that you've extended a bit. In the soybean oil, I'd look for pretty solid resistance at the upper Bollinger Band. It's been more of a laggard market than a leader. In the corn, now you're back over the upper Bollinger Band. And in this market, here's the difference. Yesterday, and I'm going to Monday, both numbers that make up the slow stochastic as seen here were over 80. Today they're over 80. If they can close over 80 tomorrow, it means the market is converting itself from being overbought into embedding, and then until the red line closes back under 80, I'd be looking for good support on all breaks as the market continues trying to work its way higher. The next resistance, if the market can get a pop, and it's the 100-day average of closes, and that hasn't been seen since June when the market let go to the downside. If we come to the wheat market, this market is a drought-driven market. I don't know if drought's the right word, maybe weather-driven. I think that's probably a better word because the crops have been cut. The heat has done them in. And At that point, we're now seeing the real losses show up, and this market is running. You always pay attention to that. I'd be looking right here. Are we going to get a bullish crossover where the 18-day average goes over the 100? And I'm looking here. Is the market going to be able to put together a string of days? This was yesterday, day before, on Friday. So you have day 1, both numbers over 80. Day 2. Like in the corn, tomorrow's a very important day, which means it's a day where the market should fight not to stay up and not embed. Doesn't mean it's going to do that, but that's what I would expect, because most of the time you don't embed. You get overbought or oversold. In the sugar market, you're just collapsing this market. These are new lows, and this market is under the weight of a world change that doesn't use sugar in the form of this. It's ethanol today. That's what you wanted for the sugar cane. You're not looking toward sugar because the demand for sugar isn't there, and you're seeing that. But you've been seeing this for a long time, and it is still going on. It is certainly not a worthless commodity, but it is certainly a commodity that has fallen under the lower Bollinger Band. The odds favor it's going to try to get back over it, and it's got resistance, as I see it, strong resistance at 1110. In the coffee market, we have a market that's got higher lows, higher highs, back under the 18-day average. As I said yesterday, for those that wanted to buy that 18-day average, they had an awful lot of risk back to 108.70. I know it doesn't sound like a lot, but 230 points is about $800 in the market. In the cocoa market, the trend remains locked in with the embedded reading, and as you can see, these rallies just aren't holding at all, and the market's down to new break lows for its move. In the cotton market, I'm looking for the resistance to be at the upper Bollinger Band. We have an overbought market. Is it trying to embed? Well, today, both numbers for today are over 80. Yesterday, they were not. We just have an overbought market. In the cattle market, the market's got a pattern of lower highs, lower lows. Prices close literally just over the 18-day average. It'll take very little to get them under. And then the first support I'd look for is the 107.97. To negate the downtrend, the market has to take out this rally high of yesterday. And that high was 111.12.5. Could that turn the market bullish if that's done? The answer is no. You'd still have a pattern of a lower low and then a higher high. So I'll stick with my idea that the bears are trying to take control of the market and push it down. In the feeder cattle market, we were looking at this, and you had a rally yesterday, outside day down. If the market breaks down, one of the targets could be the lower Bollinger Band. Momentum is just turning down. If this were to give ground in a material way, then the 100-day average at 147 might be the next support zone. A market that got no bounce today, which is a bit surprising off the news of the Chinese delegation wanting to talk with America again, was the hogs. They have lower highs, lower lows. They got no bounce, not like what we saw in the grain. So you put it all together, you wonder what you got, and I'll be talking about it. In the morning, I start off with my subscriber video. None of you see that. That's where I'm actually able to say, buy here, sell there. This is what I think this person's doing. Maybe the hedgers are doing something. I come up with the ideas, but I review 40 charts. Then I write my midday commentary in my evening. If you've seen those, you know you got to think of it as a synopsis of major events all over the world, prepping you for what's up. Example, we had the API report, big builds, not what the trade was looking for. A bit bearish action. What does that mean? How do you work with it? Well, all you need to do to get this is give us a call. You can go to our website, www.iraepstein.com. You can click up here at any time. That'll take you, if you're watching me on Facebook, right to our website, and you can fill out the forms there, and away you go. I'm Ira Epstein. You have a great day, and I'll talk to you all tomorrow.